Grid trading is an automated trading strategy that involves placing a series of buy and sell orders at predefined price intervals. This strategy is widely used in cryptocurrency markets to take advantage of price fluctuations and generate consistent profits. By setting up a grid of limit orders, traders can systematically buy low and sell high without requiring constant market monitoring. What is grid trading? Grid trading is a trading strategy that executes orders at specific price levels, creating a grid of buy and sell orders. This method takes advantage of market volatility by capitalizing on price movements within a defined range. Automated execution. Grid bots automatically execute trades based on preset parameters. Works best in ranging markets, ideal for sideways or oscillating market conditions. Risk management. Traders can set stop loss and take profit levels to minimize risk. Suitable for both beginners and advanced traders. No need for deep technical analysis. Why use grid trading in crypto? Automates trading process. Reduces emotional decision-making and enables 24/7 trading. Maximizes volatility profits. Earns profits from small price fluctuations without predicting market direction. Scalable and customizable. Traders can adjust grid parameters based on risk appetite and market conditions. Minimizes market timing risks. Reduces reliance on precise market entry and exit points. How grid trading works. Set price range. Define the upper and lower price limits for the grid. Choose number of grid levels. Determine how many buy and sell orders to place within the range. Configure order size. Decide the amount allocated for each trade. Automate with a grid trading bot. Use exchange-provided or third-party trading bots. Monitor and adjust as needed. Optimize the grid to align with market conditions. Best crypto exchanges for grid trading. Binance offers built-in grid trading bots with customizable settings. KuCoin provides user-friendly automated grid trading features. OKX supports advanced grid trading strategies. Pionex known for its pre-configured grid trading bots. Bybit includes flexible options for grid trading. Types of grid trading strategies. 1. Classic grid trading. Places buy and sell orders at equal price intervals. Ideal for sideways market conditions. 2. Reverse grid trading. Generates profit in trending markets by shorting assets at high prices. Suitable for bearish market conditions. 3. Dynamic grid trading. Adjusts grid parameters based on market trends. Requires more advanced settings and analysis. Best practices for grid trading. Select an appropriate price range. Avoid setting grid levels too close or too far apart. Use risk management techniques. Implement stop loss and take profit levels to mitigate losses. Monitor market conditions. Adjust grid settings to match changing volatility. Avoid overleveraging. Keep leverage low to reduce the risk of liquidation. Optimize grid size and spacing. Balance frequency of trades with potential profitability. Risks of grid trading. Market trend risk. Grid trading is less effective in strong trending markets. Capital allocation. Requires sufficient funds to maintain all orders in the grid. Exchange fees. High-frequency trading may incur significant transaction costs. Liquidation risk. Leverage can amplify losses if not managed properly. Conclusion. Grid trading is a powerful strategy for taking advantage of market fluctuations, particularly in sideways trading conditions. By placing buy and sell orders at regular intervals, traders can automate their trading process and profit from price oscillations. While grid trading offers several benefits, proper risk management, exchange selection, and continuous monitoring are essential for success. Whether using manual setups or automated bots, grid trading remains a versatile tool for both beginners and experienced crypto traders.